morning, good morning, good afternoon, everyone. Uh, you're welcome to today's analysis. Today we'll be looking at a particular topic on our trading view. We'll be looking at how to trade, how to identify market structure, how to identify market structure. So today we'll be looking at how to identify market structure, how to identify market structure. And as you can see, this present chart, we are on Euro JPY. So on this particular currency here, you can see that uh, the the present trend of this market, as you can see, we are on 4 hours time frame. The present uh, but the present market structure now is an uptrend market. It's an uptrend market, as you can see on this trading view. The present market is uptrend. How do we know it's uptrend? So before we start, we talk about how to identify market structure. So there are so many things that we can use to identify the present market structure. We can use the candlestick, which is obvious to us here. Then we can also use our moving average to identify market structure. So presently we are going to talk about uh, candlestick as a means to identify market structure. So market structure means that uh, help us to identify the present condition of the market. And as you can see, the present condition of this market is an uptrend, which is buy. So presently, buyers are in control of this market. Buyers are in control. They dominate the market, and you can see from here there is uh, plenty highest high and the highest low. So you can see from here, this is the low of this, and this is the highest high, this is the highest low. So there will be multiple highest high and lowest low in an uptrend market, as you can see from here now. So you can see this is the lowest low, this is the highest high. You can see it, you can see it on the chart here. Highest low, highest high, highest low, highest high, highest low, highest high, highest low, highest high. So you will see multiple highest high and highest low. Let me clear all this so that I can see the chart clearly. Let me remove the Fibonacci extension I put on the chart. So let me also remove this. So you can see from this chart that the market condition is showing that the buyers are in control. So you can see from here, let me draw a real line so that I can understand what I'm saying. Just skip it. Let me do this. Let me do something easy. That will be easy for us. So draw. Let me draw a rectangular shape. So this is the eye here, and we have another one. We have another one there. We have another one there. You see it. Then there is another. Let's go for this as well. This eye here. So you can see the market will create multiple higher high and lower low. Create multiple higher and higher low. So on a sell market, so let's check the sell market and see the trend that the market is presently. Sorry about that. Sorry about that. So let's look for a downward market. Very good. This is a very good example of a trend market. So the present trend of this market is what is a downtrend. The present trend of this market, you can see, is what a downtrend. This is a downtrend market. So let's draw a trend line. So I can see that can see the trend the market is creating presently. Mhm. But it started from this. So there is a break on the trend line, but the market is still raging. So you can see that this is an example of a trend market. Then let's check for another one. Let's check for another one. We want to know the market condition. So you can see, let's check another here to understand what we are talking about here. Mhm. Good. So this is an example of a trend market. This is not a trend market. This is what we call a range. A range. So the market is not creating any market structure presently. So it's just going from one high to another high. So you can see it on the there is a break on this particular area, but the markets have not really determined what the market wants to do. So this is a range. So it will be creating, just moving from one high to another and go down, high, go down, and until when it creates a particular trend that is moving up or down. So this is an example of a range. So let's check the overall view to understand it more better. Let's check the overall view to understand it more better. So you can see there is a particular trend already that the market creates. There's a particular trend, but from the trend, you can see that from the trend there was a range for a couple of days, more than this since March 17. So there has been a range from here till this area. So it shows that the 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 present structure, which is an uptrend, the market stopped the structure and is creating a range until when it break out of the range, that determine the direction at which the market is going to move. So presently, this on 4 hours time frame is on is a range. Is an example of a range. So the price contain of multiple, just moving within high and low, high and low. So the market will be moving up and down. So that's that. Then we are if you are looking for any buy opportunity on this particular area. So until when this area until when the market break this particular area, that's when you can look for a buy from this particular market. So until when the market break this area. And why do I say so? So why do I say so? Until when the market break that place. Let me go back to the highest time frame and see. So until when it break out of this place, and it have to be a solid body candle, not ordinary break. It has to be a solid body candle. It has to be a solid body candle. So it has to break out of here. And say have to break out of that area. For us to go for either to go for a buy from this market. You have to break from that place. So that's about let me put it there. This one that zone. This place is a zone. That place is a zone. That place is a zone. That place is a zone. So that's why you put that in that place. So let's go to the lower time frame. This 1 hour. We understand what I was saying clearly now. You can see from 1 hour that the market is just moving within this bus. Market is moving within this bus. So this is a range market. It's not creating any trend. There is no trend presently. There is no trend on this place presently. There is no trend. You can see there is no trend. Market is not creating any trend there. Just a range moving within this bus for the past, let's check, from here this area since March 6th. So the market has been moving within this bus, does not create any trend. So let's check another pair to buttress more on our point. Is another pair. We are on 1 hour time frame. You can determine market structure from any time frame that you choose. But to enter any trade, you have to understand why are you entering the trade. Because if you are not seeing any area of value from any market, there is no point from entering such a market. You have to identify where are you going to buy and where are you going to sell before you enter any trade. Where is a possible area that you can put in your money, where you can enter the trade from. Trading is sweet, but it can also wipe away all your uh, capital if you are not managing your risk and managing your money properly. So before you enter any trade, you have to ask yourself question that what is the present market structure? It's very important before you enter any trade. Ask yourself the question, what is the what what is the present market structure? It is very important before you enter any trade. So after you identify that market structure, the next question will now be that where is the area of value? Where is the area of value? And what do I mean by area of value? That is an area at which you can uh, you can determine whether this is where the market is going to change the direction. This is the area at which the market, like what we draw in this currency pair in a euro card, we draw our area of value, that where is it possible for this market to change direction. So like this area is our area of value for an uptrend. So you can determine that when the market break this uh, line, let me change it to the dotted line so that you can understand where the area of value is. So when the market is solid body can break out of this range, it shows that the market is ready for a continuation of the uptrend down to this zone, the end of the zone. Are you clear? So it is important to answer that question. Then after you now identify your area of value, you need to identify what is your entry trigger. Where are you going to enter the market? Where are you going to enter? What give you uh, uh, a confidence that the market is ready? Like double top or double bottom. So all those are something that will give you as area of value. Then a solid body candle must break out of that area to give you confirmation that it is uh, ready for you to exist, to enter the market. Then where are you going to come out of the market? Your exit for a for take profit and your stop loss. Your take profit and your stop loss. You can see from this USD JPY, we draw some diagram here. At least you can see here now. uh, This is where we are expecting that buyer is in control from this area. We expect that when the market breaks this particular green gray line, shows that the market is ready for a buy down to this area. You know whether you're following and whether you understand what I'm saying. So until when the market break out of that area, you cannot enter that trade. So that's the meaning. So you cannot enter the trade until when the market break that area. Then also until when the market break this particular area, it means that the seller have taken control of this market. So it's no longer an uptrend. So let's go to 4 hours so that you can get what I'm talking about here. On 4 hours, you can see that in 4 hours time frame, which other time frame, which other time frame, further around the chart. So you can see this is down market, but the this is trend. Let me draw a trend again. You can see the market has already broken out of that trend. Market has broken out of that trend. The market has broken out of that trend. So and since then, market has been ranging. Since when it broke out of it, still ranging. You can see market is ranging, creating a range. You can see from here, and the market is creating a range. Let's go back to another time. So market has been moving inside that yellow box. You can see moving inside the box. So I think you understand what I'm talking about. Thank you very much for your time.